XRP Price Prediction. Hey, what's going on, XRP Army? Glad to have you guys back today. What a roller coaster of a day. It's currently sitting at down 1%, but at the bottom, it had ran all the way down to 44 cents today. Now it is currently back sitting at 40. Let's go ahead and switch to the Japanese candlesticks. Currently sitting at 48 cents. So a big swing, 4 cents to the downside, getting very close to that 50 moving average that we've been talking about for the last couple of days. But really what was impressive is it did break significant below our 21 exponential moving average today, but battled back, because that was really the section that we said specifically over the last couple of days was going to be a support level where the bulls would definitely step in. Obviously, with the market data today, complete market manipulation, dumping the price to a really, really low price, and then shooting it back up. And that seems to be the case for everything in the markets. I mean, even if we take a look at stocks are all rolling green. Crypto's crashed hard, all pumping back up to the upside, which is really good. And then even when you take a look at something like the NASDAQ, had a crazy hardcore slam to the downside. If you also take a look at US 30, hardcore slam down to the downside. Now look at that rally, absolutely crazy. And then of course we look at the SPX 500 as well. SPX 500 slammed down, rallied to the upside. So some really interesting, wild and crazy stuff today. And we've been talking about that's the potential that's going to happen. Why? Because the new CPI data came out today, the new inflation data. And we're going to cover that in today's video. So, hey, by the way, welcome to the channel. My name is Ryan Huggins. I'm a crypto and real estate investor here in Orange County, California. And my job is to help be your crypto shortcut. Because if you're like most people, you probably don't have the opportunity to spend hours a day in the charts, hours a day reading articles, going through headlines, watching YouTube channel. But I do. That's my job. And then I bring that information to you in a condensed manner on the channel. So if you're looking for a shortcut, smash that subscribe button, smash that thumbs up. We're going to jump into the weekly, daily, and 4-hour today of XRP. We also have some really great articles to cover. One, why is the crypto market down today, right? And this was posted 7 minutes ago. We had a crazy crash. We'll go ahead and cover that. Also, Tether, this is good, right? So Tether reduces commercial paper exposure to zero, replaces investments with T-bills. So that'll be interesting to see how that goes. Ethereum becoming highly centralized after transition to proof of stake, pundits warn, because if you remember, there are only a certain number of nodes up and running right now, and they essentially, well, not essentially, they do control the entire Ethereum network. And today, the big news, why the crash, we'll cover this as well. US inflation is sticky at 8.2%. What's next for Bitcoin and all of the markets? Taking a look here at XRP, one of the interesting things that we have been covering is the 5 levels, right? So recently, we've been sitting here at this 50 cents, and we're waiting to go again to 55 cents, and then we're waiting to go to 65 cents. Well, the opposite is true as well, which we've been talking about. If we're at 50, we could go to 45, and sure enough, we went even lower today. So when we take a look at our Heikin-Ashi candles, and let's go ahead and get rid of everything on the charts, all the drawings. We'll start fresh here, okay? So we'll also go ahead and we will turn off the sequential indicator. So here we are sitting on the daily charts. And as we were talking about for multiple days now, this was the candle that would potentially be our support level. And sure enough, it is the support level. But when you're looking at that, it got right to the bottom of that level there, right? So, I mean, literally the tippity-toppity of the bottom of the bottom. So 43,753 was the bottom of this. That was also where the 50 moving average was creeping up to, and it got right into that zone before the rally this afternoon. Let's go ahead and jump over here now to the 4-hour charts and see what happened. So we'll go ahead and go back to Heikin-Ashi. We're going to remove the daily one because we want to get even more precise. So if we take a look now at our last blue candle before the up move here, on the Heikin-Ashi candles, that gives us our supply and demand zone. This is going to be on the 4-hour supply and demand zone. And then we'll take a look, where did price come to? Right into that zone. So right at that 44857, which is the top. It even dipped in there a little deeper, getting itself down to that 43869. 43869 price before making its move, or actually it barely missed. The bottom of that is 43869. The bottom of that candle ended up being 44020. So 4402420 on 44 cents and 21 hundredths, or 1,000ths, 1 millionths of a cent there. So now, as we see here on the 4-hour, it rallied back up. It's currently running into resistance on the 4-hour here at the 21 exponential moving average. And as we flip over to the Japanese candlesticks, we'll notice the next level in line is the 50 moving average. And then after that, that's the 50 exponential moving average, the red line, and then the 50 simple moving average. As we take a look here at the RSI, we talked about this specifically yesterday, price getting down into the oversold territory. Sure enough, it did get there and now rallied hard off of that bottom. It's on its way up now. It has flipped to a bullish green background on the RSI, getting very close to our market baseline. You'll notice the market baseline is at exactly 50 as well. Are we going to run into a ceiling here and return back down? Only time will tell. We'll keep a very close eye on that. We do have 1 hour, 4 minutes left in this candle. Let's go ahead, and that's a 4-hour candle. But if we take a look at the daily, there's still 5 hours and 4 minutes left in the candle. The next level we have up here to the upside, you'll notice as well, is right here at 50 cents again, running into that 1100 the 1100 exponential moving average, which it has been a pretty ridiculous resistance over time. We did break through. We got a little breakthrough here, but unfortunately did not stand that rally. So that's what's happened today. Now let's see where price could be going after we cover these articles. Why is the crypto market down today? Crypto prices are falling and it seems like there's no bottom in sight. Here are 3 reasons why crypto market is down. The most likely culprit on the day is a hotter than expected consumer price index, CPI. Remember, we covered PPI yesterday as well. The hits keep coming. CPI report, which showed consumer prices rising by 0.4% in September. Compared to 1 year ago, consumer prices are now 8.2% higher, according to data from the Bureau of Labor Statistics. The CPI report showed similar upticks in other categories, with this core CPI rising by 0.6% and 6.6% respectively when energy and food increases are removed. So if you'll notice the numbers here, this is the month over month. We rose a tiny bit month over month. Year over year, this is the rise that we've experienced. Meanwhile, non-farm payrolls added 263 jobs in September, and the unemployment rate dropped to 3.5%. So here's the dichotomy. Here's the reason you hear people out there screaming, we're in a recession, and then, no, we're not in a recession. So a recession, you'll know when we're in a recession when you start to see people getting cut from their job, fired, laid off, furloughed. That's when you feel the real pain of a recession. We have not got there yet. Obviously, with the GDP numbers and things, technically, the recession is there on the numbers wise, but not when it comes to the unemployment. So even though the economy sucks, there's still a lot of people needing, like, hiring jobs, right? So there's a lot of companies out there still hiring, even though the economy is bad. In brief, rising inflation is the absolute last thing the Federal Reserve wants to see. The Fed rate hikes are meant to cool off the economy and put a damper on high inflation. So the October 13th higher than expected report is likely to translate into another round of 0.75 basis point hikes in the upcoming months. So if you'll notice, if you've been paying attention, they've continued to rise interest rates over and over, and they've continued to go by 0.75. There's whispers out there they might go by a full basis point. There's also whispers out there that might start to the Fed may finally pivot to 0.5. But that's why it's important to follow these numbers, because your stocks and your cryptos all fall in line with what is going on with these numbers. In response to the report, Bitcoin price shed nearly 5%, and Ether, which is at 1290 right now, dropped by 6% before both regained the majority of their losses in intraday trading. The fact that BTC and Ether are trading above their daily lows suggests that traders anticipated an unfavorable CPI and that negative news flow was already priced in. And basically, the bulls were waiting for the price to drop, buy the dip. Now, I know a lot of you guys are like, buy the dip? What are you talking about? Remember, there's day traders out there that trade the intraday trading. So when price drops to a significant level like that, they'll step in, buy it back. But at the same time, now we need to be careful because of that snap move to the upside. Are they going to start unloading their positions and taking profits? Given the high correlation between crypto and equities markets, Bitcoin's price action tends to follow the direction of the S&P 500 and the Dow, which I showed you guys, and we'll follow that up more in the charts here in a little bit. And a number of economic events occurring in mid-October could continue to pressure crypto prices. The following dates highlight important economic events that have a history of impacting investor sentiment in the crypto market. Coming events to pay attention to: October 12th was the Federal Open Market Committee, or FOMC. The minutes came out on how that went. Also, what happened on October 12th was the Consumer Price Index, CPI, just dropped on our heads today. Crazy, crazy move. October 17th, the Q3 earnings season begins. So all the corporations will be turning in their numbers on how well they did or did not do. And then, of course, October 28th, personal consumption expenditures, PCI price index, all very important to keep on your mind. In addition to these upcoming events, the strength of the United States dollar and what appears to be serious escalation and conflict between Ukraine and Russia continue to weigh on all of the markets. Federal Reserve interest rate hikes. Rising interest rates increases the cost of borrowing money for consumers and businesses. This has that knock-on effect of rising business operational costs, the cost of goods and services, production costs, wages, and eventually the cost of nearly everything. And high unsuppressible inflation is the primary reason the United States Federal Reserve is rising interest rates. And since rate hikes began in March 2022, Bitcoin and the broader crypto market have been in correction. And also, the rate hikes have not curbed inflation yet. That's the real problem. We are starting to feel the pain, but the pain is not solving anything. The inflation continues to rise. We thought we had a peak, which we kind of did at 8.1, and it is falling a little, but it's not really getting under control. If inflation begins to taper, the health of the economy improves, or the Fed begins to signal a pivot in its current monetary policy, risk assets like Bitcoin, altcoins could begin the canaries in the coal mine by reflecting the return of risk on assets from investors. So let's wait for that pivot. When the pivot happens, booyah, it's bull season. Another reason why the crypto market continues to fall is the persistent threat of regulation. The cryptocurrency industry and regulators have a long history of not getting along, either due to various misconceptions or mistrust over the actual use case of digital assets without a working framework for crypto sector regulation. Different countries and states have a plethora of conflicting policies on how cryptos are classified as assets and precisely what constitutes a legal payment system. And the third thing bringing down the crypto markets and holding them down is scams and Ponzi's triggered liquidations and repeat blows to investor confidence. Scams and Ponzi schemes and sharp market volatility have also played a significant role in crypto price crashing throughout 2022. Bad news and events that compromise market liquidity tend to cause catastrophic outcomes due to the lack of regulation. The youth of the cryptocurrency industry and the market being relatively small compared to equities markets. So what can we expect for the rest of 2023? The factors of impacting falling prices within crypto market are driven by Federal Reserve policy, meaning the Fed's power to raise, pause, or lower rates will continue to have direct impact on Bitcoin price, ETH price, and altcoin prices. In the meantime, investors' appetite for risk is likely to remain muted, and potential crypto traders might consider waiting for signs that U.S. inflation has peaked and Federal Reserve to begin using language that is indicative of that policy pivot. Tether reduces commercial paper exposure to zero and replaces investments with T-bills. The USDT issuer has faced criticism for its exposure to commercial paper and specifically its alleged holdings in Chinese commercial paper. Stablecoin issuer Tether Holdings Limited has unwound its exposure to commercial paper, addressing a long-standing item of contention among detractors who've criticized the quality of its reserves. In addition to removing commercial paper from its reserves, Tether announced on October 13th that it had replaced those investments with United States Treasury bills. Reducing commercial paper to zero demonstrates Tether's commitment to backing its tokens with the most secure reserves in the market, the company said. So essentially, paper is they were holding investments like stocks, bonds, other things of that nature in overseas companies, in US companies. And obviously, if those companies were to tank, then it would also reduce the money that Tether is actually worth. So they had to get rid of that. And now they have a more stable coin. While Tether has long been subject to public scrutiny about the reserves, detractors have focused on the composition of its assets for the past year. Namely, in October 2021, Bloomberg speculated that Tether may have oversized exposure to Chinese commercial paper at the time when one of the country's largest property developers, China Evergrande Group, was on the verge of collapse. And that was a very, very scary situation, very, very big deal. Has not collapsed. There's still potential of it collapsing, but with Tether getting out of that, we may not have to be exposed to that exposure. Commercial paper is a short-term unsecured debt obligation issued by a corporation or financial institution that typically carries a higher credit risk. In June, Tether denounced claims that 85% of its commercial paper portfolio was backed by Chinese or Asian commercial paper. At the time, the company also said it would eventually reduce its commercial paper exposure to zero. In the following months, Tether issued periodic updates showing a sharp reduction in its commercial paper reserves. Ethereum becoming highly centralized after transition to proof-of-stake, pundits warn. Ethereum network has recently faced criticism following its merge, which switched to blockchain to proof-of-stake consensus mechanism. New data suggests that exchanges on the blockchain now control over 60% of mining pools. Analysts cite expensive staking fees and market dominance as reasons for exchanges having an edge in staking Ethereum. The Ethereum merge took the blockchain to proof-of-stake consensus mechanism, writing its miners and replacing them with validators. While switching the POS has several benefits, the downside is trickling home. Since the launch of Ethereum in 2017, it has been touted as a truly decentralized platform, becoming the second largest network and the largest in terms of decentralized applications, or DApps. While decentralization is the center of the creation of distributed ledger technology, DLT, certain factors may introduce subtle elements of centralization. Following the merge last month, miners have been relegated off the network and replaced with validators that require at least 32 ETH to produce a new block. While this was longed for because it reduces network's electricity usage and slightly increases its speed, it poses a problem as most users cannot afford 32 ETH to join the validation process. The high cost of mining ETH has seen users turn to mining pools on centralized exchanges like Binance, Coinbase, Lido Finance, and Kraken, with 14 million ETH worth roughly 19.2 billion staked on Ethereum blockchain since the merge. About 60% are in control of centralized exchanges, giving few entities powers over the validation process, which is fundamental in the chain. More problems mount for proof of stake. POS consensus mechanism have been hailed as the ultimate upgrade of the Ethereum ecosystem, as they will reduce energy usage and improve speed while giving validators staking rewards. It has not been as rosy for Ethereum's POS, as analysts have cited network safety as the proof of work model is the safest mechanisms for users' assets. So let me know down in the comments, are you excited about the proof of stake, or did you like the proof of work Ethereum better? US inflation is sticky at 8.2%. What is next for Bitcoin? Inflation declined by 10 basis points in September, the latest consumer price index print has revealed. U.S. inflation has declined from 8.3% to 8.2% on a yearly basis in September. Although the consumer price index fell by 10 basis points, the decline was less than economists' expectations. As inflation is still high and the economy is in crisis mode, the Fed is likely to continue hiking interest rates, which suggests crypto will continue to suffer. U.S. inflation keeps falling, but it's still running hotter than the Federal Reserve would like. The Bureau of Labor Statistics dropped the latest consumer price index report Thursday, showing that inflation cooled by 10 basis points in September. The price of goods rose by 8.2 on a yearly basis last month, falling higher than economists' broad expectation of 8.1 reading. On a monthly basis, the CPI rose by 0.4%. Despite coming in higher than expected, today's print is the third consecutive monthly decline in U.S. inflation. So could we say peak, right? Maybe the 9.1 was peak, following a 40-year record high reading of 9.1 in June of 2022. Although the latest few CPI prints have indicated that inflation may have peaked, markets reacted negatively today, reading to the downside this morning. Major U.S. stock indices like the Dow, NASDAQ plummeted in pre-market trading, while crypto markets also saw a sharp decline. Bitcoin was down over 4%. The second largest crypto, Ethereum, had sold off by 6%. All right, so jumping back over here now to XRP, we're down 0.45%. Ethereum down 0.49%. Ethereum has battled back heavy today. Absolutely crazy. We also have Bitcoin Bitcoin is even in the positive territory, up 1.3%. What an amazing day for Bitcoin. Bitcoin saw a low of 18,131, and it is currently trading at 19,400. All right, great. So now let's go ahead and jump back over here to XRP. Let's take a look at price prediction. Now we do have the downside price prediction. We're going to flip to the 4-hour supply and demand zone. So our 4-hour supply and demand zone, the last white candle before the down move would be this candle here. And you can see we are actually in that spot now. We need to break above the next level up, which is going to be this candle here, that 5242. So right now we are inside the trading zone of this box, and this box is going to be our supply and demand zone that we're trading in right now. Let's go ahead and zoom in a little, and that's going to give us prices of 4857 with a top of 4960. And when we flip back to Japanese candlesticks, you can see we are in there. It is still rejecting off of that 4-hour 21 exponential moving average. It's not giving up though. In fact, if we take a look here at a smaller time frame, the 15-minute, you can see that it did reject off of its 1100 moving average line to the downside, this last candle, but it is powering back to the upside on the 15 minutes. 15-minute chart is looking crazy bullish here. As you can see, price has been rising like crazy. Its 21 exponential moving average has flipped bullish. The only problem that we're seeing is we are now getting into that overbought territory up here at the 70s level. Price is flattening out, or RSI is flattening out. Price is continuing to climb. Potential bearish divergence right in that zone. We also have, let's look at our count indicator here. We are on only the 3 count of that. That's totally fine. We look here on our daily. The daily count is a 3 count buy signal potential. It's got to get to 9. Our 4-hour is now in, it just finished a 5 count buy signal. So interesting there, right? So we're running into, it doesn't matter about the signals. That's just something that I like to use. It's called TD sequential. You can take a look at that indicator. But right now it's at a resistance point. So where does price go from here? Well, one or two things. One, it's going to reject off this all the way back down to our lower box here, which is that box of 44,857 or 43,869. Again, I'm not a financial advisor. None of this information is financial advice, just financial entertainment. It's just what are the charts doing? So I'm assuming you're using paper money to do some trading. If you're doing that, if you're doing your own real money trading, then do your own research as always. So the next level up, after we break this zone here, which all of this crazy interference, but if it breaks through that, so we have the 21, we have the 50 exponential, we have the 50 simple, and we also have our overhead resistance of 50 cents, 50242 that it needs to break. After it breaks that, we can make our way up to the 51 cent level, and then it would have a top cap of that box, 5292, so 53 cents essentially. After that, we have our next box up right here, and that's going to get us overlapping here. That's a 53 cent box. And then after that, we need to break this zone here. So those are kind of the levels that I'm watching to the upside. So what am I watching to the upside? I'm watching for price to get through all of this mess on the 4-hour charts up to this 50 cent level, 5026. After it breaks that, and if it regains this as a support, then we're looking at getting up to 53 cents. And then the 55 cents, that's the real level we want, because that's the level we can feel confident that it broke up to and it reclaimed that as a support level. If price continues to dropping back to this 44,857, then the bottom level of that is currently sitting at 43,869. All right, so that's that level. And then what happens if we drop even lower than that? In fact, let's take a look at this. Let's remove that box. Let's go one box back to here. And look, that's where price actually dipped to. It actually dipped to this 4-hour even deeper, that 44,269 level, where it took in and took off. If it drops below that level, the next lower box would be this guy here. Whoa, let's just get rid of that one. That didn't work out so hot. This box, this candle right here. And that's at 43 down to 41 cent level. If we lose that box as a support, then the next level will be down here, 40 cents, 39 cents. All right, so that's what we're looking at for the levels to break to the downside for XRP. Now on the daily, obviously we have much larger time frames. much larger targets. So if we go down to the bottom side of XRP on a large target, it's 34 cents. 34 cents over a longer period of time. If it were to continue making its break to the downside, to the upside, it's already close to it. So it's that box there, that 50-cent level. So we got 50 cents is to the upside. We need to break it up to 55. If it actually holds support on all these daily levels and makes its move back up, great. If not, we could see a return down to this 34-cent level. Taking a look over here, Ethereum's on its way to a daily level, which is right down here at $1,120. And as we talked about yesterday, this pattern was starting to play out. It looked like a bear flag. Yeah, bear flag. So if we go back in history, this was our flagpole, and then it played out down from there, and it did break the potential pattern today. So if we take a look at the parallel channel that was going here, like that, and that, it broke below the channel. So it's retesting now. It's making its way back up there. We'll see if it gets in there or if it rejects off of that again. So downside level is 1100. Let's take a look. What's to the upside? It's got a lot of interference right here that it needs to fight off. If and when it breaks to the upside, the opposite is true, and you have this really great move to the upside waiting for it here at 1693. So unfortunately, it did break to the downside when maybe returning to 1100. Taking a look here at Bitcoin. Take it here. Actually, let's go back. We're on the daily. Let's go ahead and get this horizontal line, which is this level. And that is what held as support today. As you can see, that was our previous low based on this daily candle, September 21st. It wicked exactly in that spot, bounced off. So it is rallying back to the 20 exponential moving average. Does it hold strong there? Can it break to the upside? That's what we're waiting for. If it does, then we have a level right above it, which is this level here, that 19,855. And if we can claim that as a support, we can make our way up here to 21,173. All right, so that's what the supply and demand zones are showing us there. To the downside, interestingly enough, there isn't anything in this local time period that gives us that what we're looking for. So we would actually have to go back in history, which we are at this exact time period. As you can see right now, we're right in here. And if we box these off, we have this box here, and then we also have this box here, and that's what we have right now. Okay, so that's what we're looking at. These boxes, if those break, then we have another box down here. That's at 16,000, 17,000 level. Let's go back to current times. So as you can see, there's a lot of potential support to the downside. Where it's going is the big question, right? So it just tapped off of that 18,153. The next level lower, we have that 17,567, which that was the June low. And if we remove this box, it would be getting into this deeper box, and we very well could be coming into, you know, the 16,800 level. And that helps us with what we've been talking about now for a very long time, a new lower low on a weekly while the RSI is climbing, giving us a bullish divergence on the weekly charts. And if you guys have been here following me for a while, we've been waiting for this, because look what happened the last time a bullish divergence happened on the charts for Bitcoin. Booyah, right? The big moonshot started. So we're hoping for that. You can even go further back in history, not on Bitcoin. It was the Ethereum one here. Look at this Ethereum. Ethereum's bullish divergence that kicked in on the week of March 23rd, 2020 was the start of the epic rally. So we're looking on all of these coins. We're looking for that bullish divergence. We want to see the explosion to the upside. We're going to be paying close attention. And hey, by the way, speaking of bullish and getting excited about what's happening in the cryptos, well, most of you guys probably want to make some money before the cryptos explode. So you can DCA, not financial advice, but check this out.